Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at Bitcoin and the different altcoins. We're going to take a look here and see how they are doing. They've been getting pumped big time on CNBC. Everybody's coming out and saying that Bitcoin's back and it's ready to head higher. They're calling for today, the Brian Kelly guy is saying 11,000 is coming. So let's take a look at the chart and see why everybody is so excited about Bitcoin right now. Okay, so first up, what happened was the share price came up and it hit the key resistance level. It topped out here at this red line, which is the 200-day simple moving average, currently at 10,107. So it needs to break above that level, and then it's also hitting this resistance from back here in what is this? In March, on March 7th close, and so that's lining up with the where it topped out here on the 5th, and so now you have four red candles in a row, and what's happened is the candles have broke below EMAs 4 and 8, and you can see here that pink line, which is EMA 4, crossed below EMA 8, the lime line, and that's an early reversal signal. That is not bullish for Bitcoin, and I'll show you why. Over here, when the candles were heading lower, notice that the candles are riding the pink line and the lime line resistance lower. The candles are hitting those levels and heading lower. And then right here where the pink line crossed over the lime line, that's when the uptrend started. Okay, so that the entire time that this uptrend's been happening since back here off of the 6,000 level that everyone loaded off of, that is now changing because the pink line has crossed below the lime line. This just happened. It's an early reversal signal. It doesn't mean the chart's completely broken, but it does mean if the candles keep riding EMAs 4 and 8 resistance lower, that the bears are actually in control right now, and that it is at risk of starting a new downtrend. Now here's the good news. It's getting ready to hit the key support level. That's this gold line. That's the 100-day simple moving average at 8873. So it needs to bounce off that level and get back above EMAs 4, 8, and 13, and then that would create a healthy chart again. Now if it drops below that 100-day simple moving average, that's going to be a big red flag, and that's where you could see it drop down here to the 50 and 300-day simple moving averages. You could see it drop basically down to 8274, 8275. That's where this green line, the 50-day simple moving average, is currently at. That would be the target to the downtrend. I mean, look at the volume over here. You can see the volume is very light, so they're able to pull it back on light volume, so that there's not a lot of buying pressure. Okay, so that the buyers need to step in here and and take over. So it's are people, they might have the algorithm set to load off that 100-day simple moving average. That's what they did over here. You can see on the first that there was a nice bounce off that level and it ran higher. But if they were to break below, that's going to be a bearish change in trend. Failing to break the 200-day simple moving average was a red flag. You could see this resistance line. It's catching my eye here. So you can see it has a if you go, oh shit, trading view. Okay, if you go back over here, you can see there was a top. It came down, it made another top, and then it came down, hit the 100, and then it made another top. It keeps hitting this ascending resistance line. So if it were to bounce off that 100-day simple moving average, you would be looking for a run back up to the top of this line, which is also lining up with that 200-day simple moving average. It's all going to be about breaking that 10,200 level. By the time the candles get back up there, that's going to be the big level to break. Once it gets back above EMAs 4, 8, and 13, if it gets below that 50 or the 100-day simple moving average, you could see a drop down to 8,000, 8,300. And if it drops down to 8,300, you might as well wait for 8,000. So let's look at Bitcoin Cash here. So Bitcoin Cash is pulling back as well. Notice it formed a doji up here. It looks like bearish doji cross, bearish Harami cross reversal pattern formed here on the 6th, and so you had confirmation on the 7th, and then now you have the continued follow through here to the downside, and so basically it's now below EMAs 4 and 8. You can see the pink line is still above the lime line, but they are pinched. If that pink line crosses below the lime line, that's going to be a major bearish change in trend. That hasn't happened this entire run. Notice that the nice run started when that pink line crossed over the lime line. So as long as candles are riding above that level, that signals the bulls are in control. But once they drop below and it turns into resistance, that's when things can get hairy. And so what you're looking for now, it's hitting EMA 13, and so that's the key level to hold currently at 1502. And so if it can hold this 1502 level, that would be bullish. It needs to stay above 15,000. If it drops, the downside risk is it comes down to the 200-day simple moving average at 1368. That's the red line down here. Okay, so let's look at Ethereum. So Ethereum has the same kind of setup where it broke above and it was riding EMAs 4 and 8 support higher, and then here you go, you've got the EMAs 4 and 8 are pinched. It could bounce here and reverse off of EMA 13. That's what needs to happen. It's down 4 days in a row, so look for a bounce off this level. If that fails to happen, you know, it's going to come down and test this gold and red lines. That's the 100 and 200-day simple moving averages, and you're likely to see this 650, 660 support zone tested. Okay, so you know, once again, look at the volume. So you have a very light volume that they're walking it down on. There's just not a lot of buyers stepping up. You know, you could see there were some buyers here on this lower wick. You could see how they loaded off this gold line, and so that was the you know, they have the algorithm set to load off of those moving averages. If they were to fail to break, it would signal the chart's broken, and then once again you could see these 500s tested down here at the 50 and 300-day simple moving average. I mean, it's down 4 days in a row, so it's due for a technical bounce. If it gets back above the EMAs 4 and 8, that would be bullish, and then what needs to happen, it needs to get above this high close here at 812.50. This green candle, if it can break out above the top of that level, that would be very bullish. And so, yeah, right now, you know, you're looking for a technical bounce either off of 721, EMA 13, or off of the 100-day simple moving average at 680. Okay, let's look at Litecoin. So Litecoin here is pulling back too. You can see the very strong pullback. You know, all these coins now are trading, you know, in unison. You know, you pick your poison and just ride the horse because they're all headed the same direction, it seems like. You know, nothing's really breaking away from the pack. And so it seems like since they all have the same chart, you could pretty much trade into these the same way, just about. And not all of them, but these big dogs are following the same patterns. And as you can see here, this did drop below the 100 and 200-day simple moving averages. That is a red flag. Okay, so if that 200-day simple moving average turns into resistance, currently at 159, that's going to signal downside risk. And then you could see a drop all the way down to this 50-day simple moving average at 141. That's the big support level below. Notice that the pink line is starting to cross below the lime line. EMA 4 is bear crossing EMA 4, or EMA 8. Yeah, EMA 4 is bear crossing EMA 8, and you have a close below the 100 and 200-day simple moving averages. I mean, this chart is really breaking down. You know, it has to get back above those levels to head higher. Okay, let's look at XRP, and then once again, you know, it's light volume. You know, so where are the buyers? You know, that's the question. You know, they look at all the buyers that ran up, and then you know, they're not showing up right now. Now you have 4 red candles in a row. Now that this is Ripple, so Ripple came up here and it topped out. It's and you know, I'm you know, they don't have the exact same pattern, but I guess you know, the last 4 days they're all pulling back together. So even though you know, these candlestick patterns aren't exact, they have very similar candlestick patterns on the way up here, and then they all have the 4 red candles pulling back. So this is a strong attack on the cryptocurrencies. You know, they're telling you to buy, but they're selling it off. So you know, maybe they're pulling it back to load at lower levels. That would be good. But right now the chart's broken down. I mean, why would you want to buy right here when the chart's a falling knife? You know, it's dropped below EMAs 4, 8, and 13. It dropped below the 200-day simple moving average yesterday, and now today it's breaking below the 100-day simple moving average. I mean, the downside risk is it comes down to this 50-day simple moving average. I mean, I would think, since if support does break here and these levels turn into resistance, just have some patience and wait for that 50-day simple moving average. That would be the key level. I mean, you know, these come up and they've topped. I mean, this made multiple tops here at 92 and it failed to break. Notice how it made a lower high here. That was a red flag. It wasn't even able to close at that level the next time, and then now it's breaking down. So that you know, they you know, the charts are not telling you what the people on CNBC and you know, what you're reading as saying cryptocurrency is ready to break out and head to the next level. The charts are showing the opposite. Now maybe this is the pullback for the load, and that very well could be. But if all these levels turn into resistance and the candles are writing EMAs 4 and 8 resistance lower, you want to be short. You don't want to be long. You know, you don't want to be the bears are in control right now. And so until they get back above EMAs 4 and 8 and back above that 200-day simple moving average, Ripple is going to be a risk to hold long. You know, look for a potential bounce off of 70 if that 100-day simple moving average at 79 remains resistance. Okay, now let's look at Monero. So here's Monero. You know, this is way more. Now what's interesting is some of these other charts are more beat up. And so you can see this ran, topped out over here. And so, yeah, it looks like yeah, it's pulling back, and so it came down. You could see that there was this was the bounce level right below it, and so it hit this 292 level and pulled back. And look at the strong downtrend. I mean, this has formed actually 7 red candles in a row. And notice how Monero is hitting the 50-day simple moving average. It dropped below EMAs 4 and 8 and 13, and it dropped below the gold line, which is the 100-day simple moving average, and it dropped below the red line, which is the 200-day simple moving average. And notice how when it broke down over here, notice how the pink line dropped below the lime line, and look what happened afterwards. I mean, it's got really picking up to the downside, and that's why I'm saying watch out on these other charts. You know what I mean? Because that could turn into this. That's why we don't like to hold long when candles are writing EMA 4 resistance lower. And so right now, though, this is Monero's ahead of these other cryptocurrencies, and so it is testing that 50-day simple moving average. So let's see if it can bounce off that level. 214 should be the bounce level for Monero, especially after all these red candles in a row. It should get a technical bounce off this level, and then what you likely see is a run back up to the EMA 4, and then it's not going to get the reversal going until EMA 4 at 225 turns into support. As long as candles are forming below that level, it's a risk to hold long. You know, you could see a nice technical bounce between 214, and then it could bounce up to EMA 8 at 232, and then stall out. You know, so you could get a nice you know, little percentage gain there, but then the downtrend could continue. It's a new uptrend isn't going to begin until EMAs 4, 8, and 13 turn back into support, and it gets back above this 200-day simple moving average. If it stays below 243, that is going to make it a risk to hold long. Yeah, and notice how they're able to just drive this down on light volume. Okay, let's look at XLM. Okay, so XLM is under pressure as well. You can see it has the 4 red candles. It came out, it topped out up here at this 46 zone, and then now it's down here testing the support level from over here in April. And so if that level were to break, you could see a drop down to the next support zone, which is down here, and the what is this? This is like 33 cents, 34 cents, down to 34. That would be the next support level. And notice how it's lining up with the 100-day simple moving average at 33. And so this 33 to 34 would be the target for a technical bounce if the current support zone fails to hold. It's trying to, well, it did drop below it. And so yeah, so this is just, it looks like it's breaking down lower. Because what happens is when you know, you have a key support zone like this, and then the candles come down, they need to hold that level. And now this candle isn't set yet, and so a lot can change. But what you want to see today is a close above this level. You want to see it stay above 37. If it could stay above that level, then it has to get back above the EMAs 4 and 8. Notice how they crossed over, and it's really cooking to the downside. You know, that's a signal that the bears are in control. All right, so yeah, look for a possible bounce up that 100-day simple moving average. Okay, let's look at SALT here. SALT, you know, had that nice run up. It got up here to this, what is this, 47 level, and then yeah, and then it's found some resistance now. Okay, so it hit 47, and then SALT is on a multi-day pullback. It's really cooking to the downside. It's down 1, 2, 3, 4, 5, 6, 7 days in a row, and so that is a major red flag. It's hitting, just like we were looking at Monero, it's hitting the 50-day simple moving average, and so you want to see a bounce for SALT off of this 0036 level. So this is going to be the big support level to hold. You should see a technical bounce off this level since it's down this many days in a row. When you get 5 red candles in a row, that's a good setup for a bounce. And so with this being 7 red candles in a row, there's a very good chance that this is going to bounce off of 36. And so look for a technical bounce off that level. If it failed to bounce off that level, the chart would be completely broken. And then what you'd look for is a bounce off 36 and a run back up to that 100-day simple moving average. Currently up here at 39, the gold line. Then it has to get back above that level in EMAs 4, 8, and 13 to get a reversal going. Okay, let's look at TRX. This will be the last one in the video. And so TRX is actually holding up better than the other cryptocurrencies. It's trying to anyways. Notice how it came up and then it topped out and then it came down and it's holding the orange line. That's exactly what you want to see. It's holding EMA 13. As long as that level holds, that's going to be really bullish, okay? Or not bullish, but it's going to be a signal that the chart is still holding, all these candles are holding that level. If that level were to break, that would be your clear signal that the chart's broken and that you could see more downside risk. If that level does hold, you want to see the candles get back above EMAs 4 and 8, and then you want to see a run back up here to this high close on the first trading day of May. All right, thanks for checking out this video. We'll be keeping an eye on Bitcoin and seeing if it can come down here and bounce off of that 100-day simple moving average and the 8874 support zone. All right, please come check out the chat. I'll post the link below the video. Thank you.